Now, as you're watching this, China holds barely half the US debt it once did. A decade ago, Beijing was America's biggest foreign creditor, sitting on well over $1 trillion in US Treasuries. Today, that pile has been quietly, steadily drained. At the same time, China is on track to consume more silver than any nation in history, feeding its solar panels, its electronics, its military industry, and its strategic reserves. On the surface, these are separate stories, one about bonds and one about a metal. In reality, they are the same story. You are watching the world's largest rising power trade paper promises from a declining empire for atoms of something it believes will hold value long after those promises are broken. Most people think China still has to hold US debt. They think Beijing is trapped, that its fate is tied to Washington's. They believe treasuries are the safest asset in the world, backed by the full faith and credit of the United States, and that only gold is a real hedge. They are wrong on all of it. And by the time they understand why China is trading out of US paper and into hard resources like silver, it will be far too late for them to follow. Because this isn't really a China story or a silver story, it's a pattern story, a 2,000-year pattern that has played out every time a dominant empire finances its power with debt and debased money while pretending nothing has changed. The pattern is brutally simple. Stage 1, the empire issues the world's favorite currency and the safest debt. Stage 2, the rest of the world works, exports, and saves in that currency, piling up the empire's IOUs. Stage 3, the empire prints too much, spends too much, and quietly destroys the value of those IOUs. Stage 4, the smartest players dump the IOUs and buy real assets, especially scarce metals, while everyone else is still chanting about safety. We've seen this in ancient Rome, in Habsburg Spain, in the British Empire, in Bretton Woods America, and we're watching it again today as China turns its dollar claims into mines, ports, farmland, energy, and yes, every ounce of silver it can sensibly lock up. Once you see the pattern, it's impossible to unsee. You can literally watch it unfolding on charts of US thrift, Chinese reserves, precious metals flows, and industrial demand. The story always begins the same way. An empire creates a currency the world trusts. Rome's silver denarius, Spain's pieces of 8, Britain's pound sterling on a strict gold standard, the post-war US dollar, redeemable for gold at 35 per ounce. That's stage 1 solid money backed by something real, backed by victory, backed by productivity. The world wants it. Traders demand it. Governments hoard it. Holding the empire's coin or debt feels like security. Then comes stage 2. The empire realizes it can use this trust as a credit card. Rome stretches to its frontiers, fights war after war, and quietly cuts the silver content of its coin. Spain strips mountains in Bolivia and Mexico for silver, funds endless Habsburg wars, and builds a vast but hollow empire. Britain borrows to fight Napoleon, then borrows to police the world. America, after 1944, discovers it can fund Vietnam, the Cold War, and the Great Society not with higher taxes, but with more dollars and more debt. The world keeps accepting the currency, because it remembers stage 1. It believes the promises. Stage 3 is when belief and mathematics go separate ways. The empire's productive engine slows relative to rising powers. Its population ages. Its politics polarize. Its cost of maintaining global dominance keeps climbing. Debt rises faster than the real economy. The currency is still reserve, but in reality it's being diluted. Prices rise. Assets inflate. Wages lag. The middle class at home feels squeezed, but it doesn't understand the mechanics. Abroad, the big creditor nations start to get nervous, and that's when stage 4 begins, the quiet dumping of paper for metal and matter. Not in one dramatic announcement, not in a panic, in a methodical multi-year rotation. The smart players look at the math and say, enough. We will still trade. We will still smile for the cameras, but we will not hold your promises as our core wealth. We will hold things you can't print. If you want to understand why China is gradually trading US debt for silver and other hard assets, you have to understand who learned this lesson the hard way. Start with Spain. In the 16th and 17th centuries, Spain sat on the greatest silver hoard the world had ever seen. Galleons carried bullion from the mines of Potosi and Zacatecas across the Atlantic, funding royal courts, imperial wars, and a glittering aristocracy. To the average Spaniard, silver was everywhere. To the Spanish crown, silver seemed infinite. But there was a hidden cost. Silver wasn't just flowing into Spain through Spain. It was flowing out to pay foreign bankers, foreign shipbuilders, foreign cannon founders, foreign mercenaries. The Habsburgs ran chronic deficits, borrowing against future shipments of silver to fight wars in the Netherlands, Italy, and Germany. The more silver that poured in, the more promises they issued. Europe's northern creditors watched and learned. They took Spanish silver in payment, but they didn't spend it the way Spain did. They extended credit, collected interest, built their own manufacturing bases, and gradually turned bullion into factories, fleets, and financial power. By the time Spain's silver bonanza faded, its productive base had withered. It had metal, then promises, then inflation, then decline. The people who got rich from Spanish silver were often not the Spaniards, but those who held claims on Spain and converted them into real assets elsewhere. Fast forward to Britain. In the 19th century, as Britain rose to global dominance, it did something subtle but profound. It anchored its money not on silver, but on gold. The classical gold standard made the pound the world's reserve currency. Trade was settled in sterling, central banks held British debt. Meanwhile, in Asia, especially in China and India, silver remained the monetary metal of choice. This created one of history's most brutal arbitrages. Britain used its naval power and financial sophistication to drain silver from China through the opium trade and unequal treaties. Silver standard economies hemorrhaged metal, gold standard Britain attracted it. The result, when relative prices and exchange rates shifted, those on the wrong side of the metal divide suffered relentless deflation and loss of autonomy. Now reverse the roles. In the 20th century, America played Britain's part. After Bretton Woods, the world agreed to treat the dollar as good as gold. Foreign central banks piled into treasuries. The U.S. got to run deficits as the price of providing the world's reserve currency. But inside the system, something changed. In 1965, the U.S. removed silver from its coinage. In 1971, Nixon broke the last tie between the dollar and gold. American money became pure fiat, backed by political will and military power, not metal. Foreign creditors still held dollars and treasuries, but what those promises meant had quietly, radically changed. For a while, the system held because the U.S. was still the undisputed industrial and technological core. But as the decades rolled on, factories migrated overseas, supply chains globalized, and debt filled the gap. Every crisis, 1987, 2000, 2008, 2020, was answered with more liquidity, lower rates, and bigger central bank balance sheets. Domestically, asset owners did well. Globally, anyone sitting on dollar claims was told they were safe. The pattern, once again, was deep into stage 2 and 3. Enter China. For years, China played its assigned role in the dollar system, exported goods, ran trade surpluses, and recycled its dollar earnings into U.S. treasuries. At the peak, Chinese official holdings of U.S. debt surpassed $1.3 trillion. Washington pundits said this made China dependent on America. If they sell, they'll hurt themselves, was the comforting line. But Chinese planners were looking at a different spreadsheet: U.S. debt to GDP, unfunded liabilities, political dysfunction, the weaponization of the dollar system through sanctions, and the long history of reserve currencies eventually being debased. Slowly, quietly, they began to shift. Official treasury holdings started to trend down. At the same time, China accelerated its Belt and Road Initiative, building ports, railways, and power plants across Eurasia, Africa, and Latin America. It bought stakes in mines for copper, lithium, and rare earths. It secured long-term energy deals. It built up its gold reserves, both officially and unofficially. And underneath all of that, it did something most people never think about. It locked in its position at the center of the world's silver machine. China is the largest producer of solar panels on Earth. Solar is one of the biggest and fastest growing consumers of silver, because every high-efficiency photovoltaic cell needs it. China refines and processes a huge share of the world's silver. It imports raw material, refines it, embeds it in its industrial base, and exports finished goods, while still controlling the upstream flows. It doesn't have to sit in front of cameras and say, "We're buying silver instead of treasuries." The effect is the same. It is exchanging dollar claims for control over a metal the modern world cannot run without. Think about what that really means. A U.S. treasury is a promise. We'll pay you back in the future with dollars we create. An ounce of silver is an atom, a finite, industrially critical piece of the periodic table. You cannot decree more into existence with a speech or a keyboard. As America's fiscal trajectory points toward ever larger deficits, ever higher debt ceilings, and politically weaponized borrowing, which of those two things would you rather hold as the foundation of your national power? The official numbers tell the story if you're willing to look. Over roughly the past decade, China's recorded holdings of U.S. treasuries have fallen by hundreds of billions of dollars. Over the same period, its state-aligned financial firms and industrial champions have ramped up investment in resource projects, energy, and metal supply, while domestic policy has poured subsidies into sectors like solar, EVs, and electronics that are silver-intensive. The conversion mechanism is simple: exports, and existing reserves earn dollars. Those dollars are used not to accumulate more Washington IOUs, but to buy things America can't print. At the same time, global silver markets are skewed toward paper. In London and New York, vast paper silver positions trade on exchanges, contracts, futures, options, representing many times the amount of physical metal readily available. For years, this has suppressed the visible price relative to silver's real scarcity. A nation that controls mines, refining, and industrial consumption doesn't need to win that paper game. It just needs to keep hoovering up real supply at artificially cheap prices while the West congratulates itself on having efficient financial markets. So when you hear a title like, "Why China is Trading U.S. Debt for Every Ounce of Silver," don't get stuck on whether there is a literal 1-to-1 swap happening on a given Tuesday. Understand the deeper reality. China is at the stage of the pattern where a creditor begins converting paper promises from an overextended empire into tangible, strategically vital metal. It is the same logic that drove France to demand gold for dollars in the late 1960s. It is the same logic that drove savvy actors in Weimar Germany to hold land, gold, and foreign currency while the middle class clung to Marx. It is the same logic that allowed British capital to migrate into American industry before the pound finally broke. The units change, the pattern doesn't, and where does that leave you? If your savings, your retirement, your sense of security are all denominated in the same paper, the biggest rising power on earth is slowly exiting. What side of history are you really on? If your exposure to real assets, land, productive businesses, scarce commodities, critical metals, is tiny compared to your exposure to bonds and bank balances, you are, whether you like it or not, volunteering to be the one still holding the IOUs after the rotation is complete. You can tell yourself, this time is different. You can say, the dollar has no rival, America is innovative. Modern monetary theory means debt doesn't matter. Every declining power has told itself a version of that story. Rome said it, Habsburg Spain said it, Britain said it, Weimar politicians said it. The pattern did not care. Mathematics did not care. The savers in debasing currency were wiped out, the holders of real assets, and the players who had moved their claims into the next system survived and often prospered. Here is the uncomfortable truth. China is not betting its future on U.S. spreadsheets balancing out. It is betting its future on electrons moving through silver in solar farms, on data and weapons and infrastructure built from metals it can touch, and on a world where the entity that controls real resources has more leverage than the entity that controls a reserve currency no one fully trusts anymore. It is trading promises for atoms. It is acting like every serious power does in stage 4 of the cycle. Most people will not see this until after the reset, after another inflation wave, after another financial accident, after another round of extraordinary central bank measures. They will be told every step of the way that everything is under control, that the system is sound, that there is nothing to worry about. They will learn the names of new programs, new facilities, new acronyms. They will not learn the simple lesson of 2,000 years of monetary history. If you hold your wealth in what over-leveraged empires can create at will, they will eventually dilute you to save themselves. China has decided it does not want to be diluted. It wants to own the things dilution cannot touch. And silver, small, dense, indispensable to electronics and energy, is one of those things. You do not have to admire Beijing's politics to understand the logic. You just have to decide whether you want to think like the holders of promises or like the holders of metal.